Hey everybody, welcome to One More Round. Today I've got a friend of mine, somebody that I've known for 20 years, but in the last year we've reconnected and I've seen how his business is helping people that are in the small business space and even kind of outside of that, but with the funding side. So this is Jimmy Rios. I'm excited today because we're going to have a lot of talks about being a small business, what it takes to get funding, to grow their business, and you've got some very unique programs. So welcome.
Definitely. Thank you, Josh.
Yeah.
Always good to be around you.
Yeah, man. So kind of just a background of how we know each other. We met like 20 years ago in Amway,
Yes.
of all things, right?
Multi-level marketing.
Yep. So one of my best friends today, Johnny Allo, which we've stayed in touch all those 20 years. I think he your sponsor?
He was.
Okay. Yeah, and that's kind of how we initially met, and then we had lost touch for a long time.
Years.
And then
Me and Johnny had met previously in our high school years. We worked in restaurants. He was the bartender. I was the server, and eventually we got into mortgages, and he became my boss at one point even, and it just happened like that over time.
And it's weird, like, when you look back and you see all the connections and how you reconnect with people and stuff, and today, I'm in the financial advisor world, life insurance, estate plans, that kind of thing, and you're in the business funding world, and you've done everything from mortgages to funding all kinds of different things. So
I've had I've been in that vertical, life insurance. I see the importance, for over 20 years in understanding those verticals and how important it is, which is great because it gives me more power to be able to help more people because I understand your arena and being able to be empathetic to somebody's needs, understanding that side of it.
Right.
It's great.
And I think that's important in general, like understanding where somebody's coming from. And that's why I was talking earlier, I think it was to Julio about, like, you put me into a business room and I'm talking about business with anybody. It doesn't matter how big or small.
Right.
I can pretty much relate from an emotional standpoint, from a financial standpoint, the burden, the good, the bad, the ugly. And we can have conversations because I've been through it.
Right.
And when you've gone through it, it's like, yeah, it's awesome. Having that relatability is huge in business, and you've seen the spectrum, you've seen the ups and downs, and
I've been the recipient of more downs than ups, and I've lost a lot as a business owner.
Yeah.
So when you lose, and we talk about loss in a different way than maybe a typical person thinks of a loss. Right? You think of a loss maybe in a financial sense. So you go in an investment and you lose, and you feel downtrodden, but it's more than a money loss. Right. I think when you lose in business, many times we're so heavily vested emotionally in something. We have our whole livelihood behind it, our family, our friends, everybody's looking at our brand. It goes way further than just the dollar, right? And that's one of the things that I talk about because it's when we go to help individuals, it's not just can we get you from point A to point B to make X amount of money? Well, yes, we can do that. But if you're going to be vested in this thing, if you're emotionally vested, physically vested, I mean, it's the full gamut of mind, body, and spirit inside of something, right? Yeah. And I'm a very big proponent about talking about that because it's not just the money. The money's going to come. It's an eventual domino effect of good things being done in a compound effect of actions over time, right? And that's where a lot of people have disconnects. And that's where, as an advisor in business, we become very effective because we say, well, wait, I have a saying, let's go slow to go fast. Sometimes if I understand where you're coming from, you're going 100 miles an hour on that vision. But most people make the mistake of going so fast that they burn themselves out. And that's why a lot of businesses fold inside of the first 3 to 5 years because they didn't take the time to put the foundation to be able to set the blueprints of how they're going to construct their business, and they don't look at the what ifs, right? Well, what if this happens? The what, then when, If this happens, then this, They don't think like that. Right. They just think go, go, go.
Well, and most small businesses start out of they're good at something, they have a passion about something, but they don't necessarily have a business background whatsoever. I look at myself, like I mean, granted, I was in Amway for years, and it did teach me a lot of things, a lot about the communication side of the world. But like when I started Aftershock, I mean, I didn't know anything really about business,
Right.
but I knew that I could sell,
Right.
and I could learn anything. That was my belief. So I
Yeah.
started like building websites and doing graphic design. It was terrible, by the way, but I thought oh, okay, I'm learning, and people didn't know I was terrible, and I could sell myself really well. And then it was like, okay, now I'm going to go a little bit further. I'm going to develop my talent and my skill. But the business aspect was tough. Understanding like how much money I would need for my family, runways of getting paid by clients, understanding how to bill correctly, how to price myself, how to hire, when to hire, what do you pay somebody?
Right.
Like,
See, you're going through things that you're thinking about,
Yeah.
and if we expand on that, and we actually put pen to paper on how many different areas it is, they don't go over that, right? And there are some classes that teach it, but the reality is, majority of people, they don't take the time to learn that part.
Yeah.
So what they do is what I did for 20 years in making mistakes, right? And they, I always say, like, I fall forward, right? And because I made that mistake, and then what happened over time was I started, whenever I'd be up against something similar, I would now then go to somebody that does know more than me, so that I don't make the same mistake twice, because I already went through the pain point of making that mistake. I don't want to continue making the mistake. So I might get somebody that would tell me otherwise and be like, well, can you take a look at this and give me your advice? What would you do based on what you're seeing, right? By getting another perspective, it lets me analyze the situation better so that I can. Now, does that work all the time? No. There's times where the mistake will still happen.
Always.
But
Yeah, for sure.
it's all about mitigating the risk and making sure that whatever that time frame looks like, it's going to be more efficient, so that maybe the pain isn't as bad, because now it's just maybe tweaking a couple things and I'm back on track.
Yeah,
right?
the recovery's a month or two rather than a couple years.
Exactly.
For sure.
And what I found as an advisor in business is that, you could have two businesses that sell the same thing and they're totally different. No two businesses are alike, even if they're selling the same product, right? Insurance companies, they're all different. They might sell life insurance as a product, but every single one of them is different. And you'll see the success ratio different based on many factors and variables, right? As a business broker, I buy and sell businesses, and I help evaluate businesses. So it's not just, how do you evaluate a business? You can evaluate a house by getting an appraisal, right? It's brick and mortar.
Right.
You look at comparables, you get a good idea, okay, this house next to me sold for this, blah, blah, blah. But if you go to middle America and you have 10 businesses that sell hamburgers, every single one of them is going to have a different price point in how you sell it and how you market it. And that's what I found in doing business, is that any one business is not the same. And so what that told me was that if I could help an individual with looking at their business in a different way and start learning how to value their business, that business, at some point, we're all going to have an exit strategy, right? I don't care who you are. Everyone is going to die.
Yeah,
Can we agree to that?
Yeah, you're right.
All right.
Yes.
That's an exit strategy.
Death is an
I don't
exit strategy.
I don't think it's a good strategy. I don't want to die, but you got to accept it.
Right, yeah.
Right? If we build a business and we don't understand that point, right? And we don't understand the other part, which is taxes, which is another guarantee that you're going to have to cross. Those two variables, for sure, you got to understand. But if I'm going to exit this world, or if I need to sell for other reasons, how do I value my business and get my business prepared so that if I decide that I want to exit the industry, and maybe I want to just exit and give it to my family, my son, or sell it, that I'm getting the top dollar for all the work years that I've put into that business.
Right.
You deserve that for yourself. And many business owners, small, medium, and large, I've seen them all, have made the mistakes of not taking the steps properly to do that.
Yeah, it's interesting. So one of my old clients at Aftershock, a gentleman named Michael, and he owned Value Corp. And what he did was he valued businesses.
Yeah.
And he was a very intriguing guy. I got to know him well, and I always wondered, like, okay, how do you value businesses? Because if you're on the buyer or the seller side, right, you're going to value it different.
Totally.
You're going to make that picture look completely different.
100%.
And I remember him telling me a story. I want to say it was Arizona Iced Tea. I could be wrong on this, but that was a company that had brought him on, and they got a really high multiple for selling their company.
Right.
And he's like, yeah, I did this, and this when we were looking at it, when we were presenting the numbers and stuff. And if we would have done this, and this, there's no way we would have got that multiple.
Right.
With the same business, it's the same mold of clay.
Exactly.
So what are some of the things you look at when you value a business to buy?
That's a great question. So when you're going to buy a business, you need to look at the financials of the business. And when you look at the financials, a big red flag will go off right away if the seller has no books or they're not organized enough to be able to provide up-to-date financials with the profit and loss for the year, business taxes, personal, things that are going to be able to really paint the picture of what this business is doing, right? And if they're giving you just rough numbers, that doesn't work either. Because if you're going to take over something by buying it and you're going to invest in something and you don't know what the expenses are, the true expenses, you don't know all the vendors, you don't know where you're buying the supplies, how much you're paying, how much you could save by doing this, then you're at a disadvantage because a very big part of your margin and what you make as a business owner is based on the expenses and controlling the expenses.
Right.
So if you don't have nothing to go off of, right? One, how did they come up with the value and the number that they're offering to sell you that business?
Yep.
I had a client that didn't know, and they had the money to buy a business, and it was just so happened that that business that they were looking at was priced at that amount. But when I came to look at it, that amount was totally wrong, right? They got it through our help for a lot less based on the variables that we knew that were not there, right? So almost 50%, they were going to pay 50% more for a business that on paper wasn't valued based on receivables, based on what we could prove, right? Because like you said earlier, there's a factor that's attributed when you go to sell a business, and many times it's based on the profit of the business.
Right.
Well, what do most people do in America when they have a business? When it comes to taxes, do you know?
Most people, when it comes to taxes, what do they do?
What do they do?
They just kind of wait and see.
They write off everything.
Oh, at businesses.
Yes,
for
right?
sure. Yeah.
So why? Because they don't want to pay the IRS X amount. If you're a young business, startup or otherwise, if I told you, well, congratulations, I'm your CPA, and I say, well, congratulations, you made $500,000 in sales this year, but you only had $200,000 in expenses. So now you have a profit of $300,000, and you have to pay taxes of X amount.
Yeah, 36%. Yeah.
You're going to be like, what? I got to pay $90,000?
Right. Yeah.
That's a lot of money, right? But that's a big part of that goes into valuing that business. So by you cutting that down, let's say instead of getting that 90,000 now, instead of showing 300,000 in profit, you had them cut everything down, and now you're only showing 50,000 in profit. Or many of them even show negative, so they don't even show that they're making any money, right? You can't go buy a house if you don't show any money,
Right.
right? They're gonna look at, well, what do you make? Oh, well, let me see your last 2 years of business taxes. What do you make? You're negative. I can't lend you on. There's no money, right? Everything, it's a loss. You have a losing business.
Right.
So how do you think that your business is going to get valued if you're showing 10,000 as opposed to 500,000 or
Right.
300,000? It's two different worlds.
It is.
But nobody took the time to educate. The CPA, unfortunately, I have many friends that are CPAs, right, that work in that field. There's a difference between a CPA and a tax strategist, right? There's a difference between a general doctor practitioner and a neurosurgeon, right? They're both doctors, right? They're both CPAs, but they have a different level of expertise around certain areas. Because I'm not talking bad about CPAs. I love my CPAs, but they all know different things, and they can attest to that as well, right? So if somebody comes in and says, you know, I need to offset my taxes for as much, that's what they hear. That's what they're going to do, right? A tax strategist is going to think totally different. They're going to say, well, we're going to want to show profit, and this is how we're going to mitigate the tax bite by doing this, this, and this, right? Solutions to that problem.
Yeah, and it's a good point, because like if you want to sell your business, let's say in the next 4 years, well, 2 years of financials have to show, you know, significant profit, which means you're going to bite off that tax, bullet in those 2 years.
Correct.
But it's for the greater good, right? Now, if you have no desire to sell your business, you can make it look like you have hardly any money.
But even if you don't want to sell your business, what if I could defer your taxes for 5 years?
Yeah.
Inside of a strategy, right? It's still going to be advantageous to you. But as the owner of the company, if we're able to put different mechanisms in place to defer profits, the trajectory of your profit margins are going this way on paper, right? So if I go to expand, and I'm wanting to be a franchise now, right? And we do franchise development. And that's one of the things we talk about. Like, you're a license, you have a license to do this. And now you want to go and expand in 26 different areas, right? How are you going to do that? How are you going to expand, you know, if you only have one model, right? We're going to have to do things differently to be able to get to that next level, right? And so we have to start implementing different strategies and tactics that are not your traditional mindset, because the majority of people are going to go with what they know. And if nobody has introduced different things to them in how to think, then they're going to think in the status quo, which is what they hear or what they've experienced. And then they start blaming others, because that's another thing that happens. It's like, well, here I am in a mess with my taxes, and nobody told me. I thought I went to the right channel, right? That's why you need to interview, and you need to make sure that you have mentors or advisors that are guiding you, right? I don't think, you know, Donald Trump became president just on account of his popularity. I think he surrounds himself with the people, the advisors and the mentors that know more than him to properly play the chess match to say, now, we all know, all things aside, he can say whatever he wants, and he does. But there's a lot of strategy behind everything that he does. And I was a big student of the game with Donald Trump in 1986, when I was 10 years old, when his first book came out.
Yeah, Art of the Deal.
Yep, exactly. And I was a big fan, right? But what I learned from him was that over time, everything was strategy. Everything was who he aligned himself with, smarter people that knew a lot more than him. And that shows, because now, for somebody like Donald Trump, $1 million is nothing, right? You elevate yourself to another stratosphere where maybe now you're talking billions instead of millions, right? Or trillions, right? And you start putting yourself with people in that arena. So why are we any different, right? We're going to talk about the eye-level to high-level program, which is a program that I trademarked, because at the high level, the systems that are in place at a high level of finance have been done for years, for decades. But nobody's ever brought it to the eye level because of many factors, right? Usually money, right? If you had the money, then I would do this, right? So it doesn't solve for it. So we came up with a plan to help middle America, to help the small and business and medium size and the big guys, right? So it's called eye level to high level, and we'll get more finite on how the mechanics of that work.
Yeah. I'd like to kind of get into that, because one of the things that you had originally introduced to me was like the non-recourse funding that we talked about. But let's dive into that. Let's dive into the eye level to high level. You know, what is that exactly? You know, from a funding standpoint.
Sure.
And who should be looking at like working with you on a program
Perfect.
like this?
You know, we talk about funding and lending, right? And let's understand the two differences because they get intertwined and they get used kind of interspersed in conversation, and they mean two different things. The lending aspect is very simple. If I'm gonna lend you money, right? There's gonna be usually three factors, right? There's an interest rate, there's a term, and there's a dollar amount, right? Simple.
Yeah.
Let's not complicate it. That's lending for lending's sake. Funding is the ability to get money, right? To acquire capital of some sort.
Yeah.
Now, I haven't gone into, in a funding mechanism, how to get it. One of the forms could be a loan through lending, and when the loan is finalized, then it's funded, right? And the money is acquired, right? So that's the action that gets you to funding, to funded, right? But what if I gave you a gift? That's acquiring capital, and it doesn't have to be repaid back. What if we got an investment and that's giving you profits? The monies that you made from the investment is funded money in your account. That's funding, right?
Right.
So it's two different worlds. One you owe, and you know you owe, and that's what we call burden of debt. You have to pay it back, so you have to allot a certain amount of money in your budget to pay lender A back, right? The other side, through our mechanism, is what's called non-recourse funding. And the difference between recourse and non-recourse is that with recourse, if you borrow to get a car and you don't pay your car, what happens?
They take your car back.
They take your car. The car becomes the recourse for the bank, right? So on the opposite side, if I have non-recourse, I can't take anything, right? And the way we structure non-recourse is by utilizing investment profits. Inside of our investment firm, we're going to give you profits. We're going to generate profits. And the most easiest way to attune what a profit is in investments is you go and buy a house. And you bought it for $100,000, you sold it for $200,000. That difference is $100,000. Now, that is money that is gained or funded, right? And because you sold it, there's no recourse anymore. That's money that's yours.
Right.
They can't take that away from you. That's your money, right? You'll have to pay capital gains.
Sure.
Right? Or unless, the rules with the house.
Right.
But what I'm saying is
1031 exchange.
Right, do a 1031 exchange. So with us, we have to put tax strategies to be able to offset any capital gains on the gain that you make with our program.
Yeah,
right?
unless I think if it's your home live-in,
yeah,
right? There's
250,000, and that's on real estate, right?
Yeah.
And when we're talking investment profits that are non-real estate,
right,
now we have to look at things differently. Most people understand like Robinhood, right? You go open a Robinhood account, and you'll see a lot of people put money in, and as soon as the market dips, they take it out, right? If they made money on that, they're going to have to pay capital gains on the gain, right, for that money. So we developed a program where we knew that somebody needed money. We could use the traditional norms of getting funding, right, of getting money through loans, right? We could fund them through credit inside of personal credit. We could do business credit. We could look at contracts, receivables, assets, 401ks, home equity, you name it. We can tap into resources to get cash, right? We figured that out over 20 some years of doing business, right? We mastered that side of the arena. But what we didn't and hadn't mastered at that point was if somebody came to me and they said, Jimmy, I need $100,000 for my business. Okay, and I need it because I need to hire more people, or I need it for marketing, or I need it for equipment, whatever that is. Well, if you take 100,000, even at 10%, right, and you did simple interest, right, you're going to have an X amount of payment per month, and maybe it takes 3 to 6 months for the mechanisms of whatever you bought or invested in to take hold and to start seeing a profit. So somewhere along the line, there's a burden of debt that has to be paid, and it's usually paid by the client's money that they have either saved or the profit margin, the profits they're getting from their business, the money comes out, and that's what they got to pay, usually for 3, 7, 10 years. Even if you went with an SBA loan, SBAs are not going to give you a 30-year mortgage or note. They're going to do it for short term because of the risk factors that are involved. And the rates are high, regardless. It's commercial or business loans are higher than many times even personal or mortgage, right? So you got to understand that there's going to be, you got to factor in what that debt is going to be and make decisions on that. The problem with that is that if I now can only borrow X amount because I'm tied, because I'm not making enough, right? You're putting your limited liability company that's supposed to have limited liability at risk, because many times people use their own personal credit to get this type of funding, right? Yeah. They don't know about business credit, how to attain this type of capital utilizing their assets in their business, so they use their personal credit and they put themselves at a disservice. So we knew that if we did have to use personal credit, that our biggest goal wasn't getting the money. We can get the money. It's paying off the burden of debt in a shorter period of time. So we built a program where we could pay it off in usually 4 to 6 months, which sounds outrageous, right? Yeah. Like, how are you going to get me $100,000 and pay it off in 6 months, right? And it's through what we call the power of compound interest, right? The power of compound interest, eighth wonder of the world. Yeah. For those that don't understand it, it's the ability to take a penny and double it. And tomorrow that penny is now 2 pennies, right? But if I did it a third day, now the 2 pennies doubled, and now I got 4 pennies, right? And in its most simplistic fashion, if you were getting 100% return in a compound effect where every day it doubles, by the end of 30 days, you have an equivalent of over $5 million, which is outrageous, right? Sounds too good to be true. It's a law of compounding effect, right? This is not just with money. This is with anything, right? Sure. The energy that we expound, the love that we give, the efforts and the energy. You want to lose weight? You and I are both into fitness, for sure. Right? Fortunately for you, unfortunately for me, he's in a lot better shape than me. But if I want to lose 20 pounds to look like him, the doctor's going to tell me, look, you need to exercise. The equation is you got to lose more calories than what you take in, right? And you got to put it into action, because understanding it and doing it are two different things, right? But I've been on a 10-day fat burn blitz. Yeah, now you look good. And I lost 12 pounds so far, and it's a compound effect of what I teach in finances. I'm putting it into action in my physical side, because I know that if I do this, then I'm going to get this, right? So why is it any different in finances? Let me give you an example. You've been in insurance for years, and we both understand banking because we have to put our money. We put our money, right? We don't have to put it. We do it because that's what we know how to do, right? When you go to put your monies into an insurance policy, right, those premiums are put in there so that if something were to happen, right, there's a transfer of risk so that you don't have to come out of pocket and have to pay for that damages on an accident. Right. Or if you die, that whatever you bought the policy for is going to be paid so that you can take care of your family in your absence, right? So that money that you put into these policies, if you put into a car policy, what happens to those premiums month after month? You know, do you get any of that back? Nope. If you don't have an accident? If you have an accident, you'll get a portion, sure. But time and year after year after year, those monies are going to the insurance company. What does the insurance company do with those funds? What happens to all that money? Do you think that the insurance company just has a pool of money and just sits there and doesn't do anything with that money? That doesn't make sense. Right. So they use higher levels of financing to put money to work, right? In Robert Kiyosaki's book, Rich Dad, Poor Dad, you've read? Yeah. He has a system called the cash flow quadrant. And in that system, he talks about the B and I quadrant, the last 2 quadrants, where the B is the business with a system, and then the I is an investment where the money is making money. These high-level companies, insurance as my example, have taken on that quadrant and understand the power of compounding, and they put that money to work. So that money's making money compounding night and day, 24/7, right?
Yep.
While we're not aware of these things because maybe we don't have the faculties or understanding, these companies do, right? And when I talk about X return, 1x, 2x, 3x, right? 2 times, 3 times, 10 times, right? It's hard if you've only seen interest rates in the form that we understand it,
Right.
to grasp and wrap our arms around getting a return that is higher than that.
Sure.
If somebody says, I can get you 10 times what you're making at the bank, and you're making 1% at the bank or 3% on a CD,
yeah.
you don't think that 10 times that, right, which is like 2,000%, is even achievable, or even something that is being able to, how can you do that?
Right.
But if I change the perspective and I say, what if you bought this house for $100,000, and in the next 3 months, because of the fact that we're going to fix it and we're going to put it back on the market, we're going to sell it for $200,000.
Yeah.
What did you just do with $100,000?
You doubled your money, 100%.
You doubled your money, right? So you went off the non-traditional scope of putting your money in the bank and letting them make money off of you, right? And you put it to work, right? Now, you might have had to take a hard money loan to get $100,000, because not everybody has $100,000 sitting around.
Right, yeah.
But even if it costs you 12% to borrow money, and you take 12% per year, right? It's a lot of money, right? But you divide that by 12 months, that's 12 divided by 12 is 1. So it's costing you 1% to borrow money, right? But if in those 3 months you were able to double that, right? What percent is it really costing you when you just doubled your money, right?
1.5 technically, because 3 months would be 3%, and
Right.
it's half of that, because
Exactly. What I'm getting at is that 10 times is achievable, right? Having the right mechanisms in place to do it, right? So we did that. We took the concept of being able to take an investment and be able to generate a 10x return, right? Over a period of time, right? Law of averages is if I do something over, let's say 100 times, right? And I get a return every day, I take those numbers, I divide it by 100 or however many days, and that's my law of average, right? On average, our return is returning 10x, 10 times, over a period of what we call 90 days, which is composed of 60 trading days, right? So when you trade in the open markets worldwide, not just the stock market, right? We're used to thinking the markets just on
these
the
are
stock
bonds,
market.
crypto, these are all kinds
These
of
are
things, right?
oil, these are commodities, gold, worldwide, Forex, everything that you could think of. Working at a very high level, right? How the high level gurus do it and making money, right? Not just in America, but in Saudi Arabia and London and Mexico, you name it, right? They're already doing that. So we took the concepts and said, how do we bring that to this level? What if I was able to get 25,000? I don't have 25 million to be an accredited investor to be able to jump into that world, right? It's unattainable. And many can't think of it because they never made that kind of money, right? So we had to be real. We had to bring it and put case studies together to be able to showcase that it could be done at this level, right? And it became the eye level to high level program that I originally showed you back in June when we were at the baby stages of bringing it out. I had started devising the program with my partner, Brian Fontenot, who is out of Houston, Texas. And he's the owner of Zenith Capital Investments. And they had been using this system for years, but at a high level. So, going to a hedge fund and talking about putting something like this was not an easy task. Because you're changing the whole paradigm thought process of something that is already being done. Like, why are you going to change the model? You're not changing the model. The model's still the same. You're just bringing it to a whole new faction of people that never understood it. And that's probably the biggest hurdle, is an education, right?
Yeah.
I don't know, obviously, many of those out there might not know what an index universal life policy is in life insurance, but they might understand what a term life insurance policy is, right? And so teaching somebody a different product or service inside of something as simple as life insurance is different, and you have to talk about it in a whole different way. Otherwise, it's over their head. They don't want it. I just want a term life insurance for 10 years, $50 a month. That's it, right?
Yep.
So why is it any different for me? It's not. It's a very similar fashion. We have to educate our clients, but can it happen? Can we take somebody that has a need for $100,000, $50,000, $10,000? Can we help them get the money and pay that debt off and more? Because if I get you $100,000, that turns into $1 million inside of, let's say, 6 months, right? And we're able to pay off the debt. So we paid off the $100,000 that you used to get into the program.
Yeah.
But now you have $900,000, and you're using that money for the growth of your business. Do you have other debt? Do you have other things that you have to pay in your household, right? How many of us have to pull our credit report, and on the credit report, we see the debts that we owe, but you don't see the car payment, or you don't see the Cox or the internet. You don't see maybe the electrical bill.
Right.
You don't see some of those other bills that you have that are costing you every month. What if we set up a plan to pay everything off for the whole year? How much more capital from your business and from your jobs could you keep? Can you start putting towards maybe the education of your kids? Utilizing a system that is working, because now I attune it to having, you got your two hands working, doing what you do best in your job, but you have a third arm that is working 24/7 in your favor, bringing money and capital into your business or your household. And through structure and advice, we're now paying everything off over the course for the whole year. So now you just gave yourself a raise. If you're paying $1,000 a month in extras, right? And we just put a system together to pay all that off for the whole year. You just gave yourself a $12,000 raise in the year to do things with. But people don't think like that because we got so used to paying our bills every month. We don't think, what happens when you get your check? Most people have to pay their taxes automatically, right? Then what? Do they pay themselves? Probably not.
Yeah.
They don't put 10% away, right? But because they have bills, right? So what I'm saying is, if we took this concept and we start putting it in Middle America to start putting that money to work, right? Instead of you working for your money, now your money's working for you. Now you just made yourself $12,000 a year, all on capital that came in from your investments.
So let's take two scenarios, right? First scenario, I got an extra 50 grand sitting around, and I'm looking for a place to park it.
Yeah.
But I'm like, hey, Jimmy, here's $50,000, and I give that money to you. What does that 4 to 6 months look like there?
So $50,000 is going to get you the equivalent of $500,000 inside of 6 months, right? If we have to move the goalposts because over the course of the 6 months you had to take money out, you can do that.
But if I just let it sit with
If you just let it sit, our overarching goal for the 6 months is going to be to return 10x, 10 times. And it could be more.
What do those phases look like exactly?
So every month, we're doing what's called a performance review based on the 20 days or X amount of days in trading that we did with your money. So this is going to give you a very good synopsis of how your money performed and how it grew to be able to see that growth pattern, right? It's also going to give you a percentage gain so you can see in real time what that looks like, right? So overarching goal is if we're producing anywhere from 5 to 10% per day, right, day by day. Now keep in mind, maybe the markets are crazy that day, and our system says I'm not jumping in that foray, because one of the biggest rules that we live by is to be able to have a good offense, you got to play a good defense, right? And the number one rule we go by is what Warren Buffett said, that rule number one is on an investment, don't lose your money. And then he said, rule number 2, remember rule number 1.
Yeah.
So if our goal is to make you money, we can't lose you money, because if we lose money, we start at a lower amount. Now it's going to take us longer to be able to go back up.
Right, for sure.
Right?
Yeah, the compounding interest isn't going this way. Now you're starting here and trying to compound just to make up to where you were.
If the stock market over 100 years, if a stock market didn't have a loss component and it just hit a 0 and from there kept going up, it would be at a much higher rate of return than what it averages. Financial advisors, who I have many friends of in the field, will talk about the law of averages, and they'll say, why is the stock market a good investment? Because over the X amount of years, it's performed this way. What they don't like to talk about is the downturns, the period of time when it is down, right? Over 30, 40, 50 years, 100 years, yes, you're going to get a return that looks like X amount positive. But if you're the unlucky individual that over a course of 10 years, there was a depression or a or you know what I'm saying? The other effect.
You put in your money here at 100,000, and then
and
you go through a 10-year, now it's down to 50%.
How long does it take you to go back up?
Exactly.
Just to get to the baseline.
10 to 15 years.
Right.
I mean, really, just to get back to the baseline.
So if I tell you that we can protect your money, because your money and capital is protected with an insurance policy. We actually put 3 insurance policies on that capital, right? So for 6 months, you parked your money, and like when you do a CD, you expect to get that money back in that time frame.
Right.
Worst case scenario, the markets fail, what happens to your money? It's secured.
Yeah.
It's there. So you didn't make any money. I'm talking catastrophic, worst case, doomsday effect, right? But your money's there. You can count on it, right? What happens if things are good, right? You were here, you're still at the original amount, but let's say it performed at 2x or 3x or 5x, right? Your money made money over a very short period of time because you didn't have the other effect of the negative that goes when you lose money.
Right.
So we only talk about securing money that's going to be given to you in the form of capital profits.
Right.
Right.
And because like in my world, you can kind of simplify it similar to an annuity, right?
Correct.
It's completely principal protected.
Correct.
Earns based on the index, but if the index has a down year, you're still principal protected.
100%.
It's level.
Exactly. That's a great example, right? We just took it in another stratosphere in using short-term investments, right? Because this is not a 5-year hold, right? Many times in high-level finance, you can get some good returns, but you got to leave your money in there, or you got to give up a piece of your property in form of equity to be able to get this money, right?
Right.
We don't ask of that. We don't ask for your money. We don't ask for equity. We don't ask for any of that. We just say, look, follow these rules, and when we get you X amount of money, for you to be able to 10X or offset the capital gains, we got to put that money to work in different areas of your business. So how do we do that? We need to start paying off some debt, because if you acquire debt, you need to pay that off. That's one of the best rules, is to have a good balance sheet, is to minimize the amount of money you owe others, right? So if you don't have debt through our process, you're positioning yourself in a much better way for growth. 2, we need to minimize taxes, right? Because if you're getting a gain of $1 million or 900,000 and 30%, let's just throw a round number, 9 times 3, that's $270,000. If we don't put that money to work in another avenue that's going to defer that or minimize that, you're going to have to pay the IRS $270,000. Now you just didn't see $270,000 of your money, and that's real. I have to be real with everything, because 10X is one thing, that's the return, but what is it net, right? Just because you make $100,000 a year, you don't keep $100,000 a year. And professional sports, you're lucky if you keep a third of that, right? And with athletes, and that's why you see many athletes that aren't advised properly go through their money so quick and have to file bankruptcy because they don't know what to do with their money.
All right, taxes, management, agents.
Totally. And we look at things in the same fashion at the eye level, because we have clients that are not at that level. They're making 50, 60, $100,000 a year, and they need even more help, and nobody gives it to them.
Yeah.
Right? We feel that middle America needs. We talk about affordable housing. Well, affordable housing, you can't control the prices, but you can control how much money you keep.
Yeah.
Right? If I'm making $50,000 a year, right, whatever net that is, how do I control what I keep? Right? I think it was Shaquille O'Neal who said it doesn't matter how much money you make. I made millions of dollars, and I lost millions of dollars because I didn't know how to keep it. When he learned how to keep his money and make his money work for him, he's one of the top businessmen in America, right? Because he's got contracts, he's got all kinds of deals, but he learned from his mistakes.
Yeah, I think today he's worth $400 million.
I think so.
Because he has, all kinds
And
of
Magic
restaurants.
Johnson.
Yeah, Magic.
Right?
Magic I think
Enterprises.
is the. I think he's the third richest.
Right.
It goes Michael Jordan, and then a guy that I can't even remember his name. He actually made more money outside of basketball than he did inside of basketball, but like almost worth $1 billion. But,
If you learn how to use money, money is currency. Currency is energy.
yeah.
Right? We talk about that. If you flow that energy positively with the right mentors and advisors that are going to help you do the right things, your money will last you forever. We start building legacy building infrastructures through what? Through estate planning, through trusts, through different mechanisms that are going to help you. Why we work with experts like you is, and we call them our experts, is because every piece of the puzzle, when we start putting this together, it's not just Jimmy Rios' plan. It's not just Brian Fontenot's plan or Josh Norris's plan. It's all our plans together, like the Avengers coming in with the dream team that make what the Avengers become, right? Every single one of those superheroes in their own right is strong, but they each have their own weakness, right? So together, though, they become a superpower, right? For our clients, for the fiduciary that we hold in helping our clients is to put them in the right investments, to put them in the right things, the defense versus offense side of it, where now we're protecting their assets. We're showing them ways to make their money grow for them, right? We're showing them ways to make their businesses better so their foundation is not built on sand, but it's built on a solid foundation that is immovable. And if there was a catastrophe, that we have the contingencies in place to offset anything that could happen so that the continuum keeps going, right? Many people don't think about it, but if I run a business and I'm making $200,000 a year from my efforts, what happens when I die? What happens if I leave right now and a car plows through mine and I'm left and that's it? Do you really think that I'm talking about most people, have the contingencies in place to keep generating $200,000 in income if you were the one that had all the proprietary information of your business?
No.
If you were the one that ran everything because you didn't have systems in place to keep running it? Do you have a key man life policy to pay the money needed to put somebody back in your program to do the things that you used to and replace you? They might not be able to replace you as a human being and what you brought to the household, but your business is at least getting to a point where you can say, you know what, now we can sell it. It still has the trajectory that it needs to be successful. It's just we don't have Jimmy anymore, right?
Yep. And you hit a key point there. It's so important for businesses that are of a size where, maybe they have an owner and then that owner has, a couple of C-level people and then the employees. Well, if something happens to those C-level people, let's just say it's the COO or the CTO, and they pass away and they're gone, like their information goes with them. And now you've got to, how do I replace this person?
How do I recreate that?
How do I make sure that function is filled?
Right.
And that's going to take time. It's going to take money recruiting. It's going to take, literally, your business is going to take a hit.
It's going to take a hit.
So key man insurance is extremely important because it can, fill that gap from a funds standpoint while you're replacing that function, getting them up to speed, which could take, let's be honest, it could take 2-3 years to 100%. Really get it back up to speed. So.
See, I even break it down even more down to this level. If I'm a mechanic and I'm doing 5 or 10 cars a week in my little bay that I rent, right? I'm bringing in good money, right? And I can show that.
Right.
But all of a sudden, I lost my life, and my wife, who's been taking care of the kids, and bless her heart, she's doing everything possible for the household. She doesn't know how to change a carburetor or do anything mechanical wise, right? But if you were able to have some of these things in place because you as a family talked about it, you had the right mentors and advisors in place to help you organize this. Now your wife with this policy can go and fill that, hire a mechanic to keep the continuum going, right? While you decide to do what you're going to do with that business. At the very least, that policy gave them the opportunity not only to obviously, do the funeral and do the things so they don't have to go and do a car wash for the family, but the business can keep working and doing the things it's doing while they're going through the traumatic effect of losing a loved one. Now she can put on the business hat and say, well, I'm going to run this business, right? But I'm going to need somebody to take the place of my master mechanic, right? And maybe she's got the money now to hire 3 people to do the things that he did because maybe he did a lot of things. But that's okay because now she doesn't have to worry about it. She's got the means to be able to do those things. Or decide to sell it, she can do that. She's got the means to be able to live, right? When we put these things together, so that she could live for a good period of time while she figures out how to replace his income, right? Replacing income, nobody wants to talk about that. We talk about life insurance just as if you die, then you get X amount, but really you can't replace the person. You got to replace the income that was being lost. That's why many people have to file bankruptcy and start over is because they don't have the means that was coming in, right?
Yeah, it's interesting, in this business, the thing that most men that gets almost every guy that I've sold a policy to that's married that was kind of a little stubborn on it, and it's a hard question to ask, but it's like, okay, you pass away, and do you want your wife to have to go marry for money?
Right.
And nobody likes that question, by the way. That's a terrible question.
Right.
But if she doesn't have the same skill set that you had,
what are her
producing the
alternatives?
income,
Right.
She's got to go find somebody to provide that, or she's got to go get a job.
Right.
And if she
or
was
2 jobs
at home, doing that, or maybe she went to college but hasn't been in that field for a long time.
Right. And let's be real, the market's hard.
The market's
Human
hard.
capital is difficult.
Right.
It's difficult right now.
Yeah, it is. So it's important to have those things in place. So I gave you the one scenario, right? I have $50,000. I give you that $50,000,
right?
And you can 10x that money over a period of time. Right. But now another scenario. Let's say I've got a business, it's growing, but I don't have a lot of liquid cash, right? Yeah. It's all invested in the company and stuff. But I'm like, hey Jimmy, I want to get $500,000 because here's my plans, right? I'm going to hire, 4 different, I'm going to get a new sales team. Right. We need this equipment and we need this training software. It's going to cost X amount of dollars. What can we do to get that money?
Perfect. Yeah. So we developed 2 programs. We developed the Cash Start Funding Program, which was the one we just talked about. Then we developed the Credit Start Funding Program because we know the power of credit and being able to leverage, right? And so many times we will go and procure funds. In the case of this scenario, they needed $50,000, right? Or they want to get to a half. They want to get to a half a million, but we know that if we can get a 10x return, we're going to need an entry of at least $50,000 to make that happen, right? So we're going to take our credit funding program and we're going to generate loans, right, to be able to get them to 50 or 100,000, right? Whatever that number is. The overarching goal in this scenario is 50,000, right? So we're going to get you 50,000 usually inside of 2 weeks, right? If the credit is there, meaning having a 650 credit score or better, 680 or better is even better, right? Having income that you can prove of about $10,000 a month in receivable, right? An income that comes in, or $27,000 net income, right, after expenses, or W-2 income of $40,000 or more to be able to have the money to pay the debt, right? These are
Right.
just some very generic guidelines that we go off of to pre-qualify you, right? Say somebody says, well, that's great if I had the credit. I don't have the credit, right? So then we start getting more granular in how we're going to put the pieces together. Because what if you don't have the credit, but maybe you have $10,000 or $15,000 that is coming in, that's verifiable deposits in your bank statements. We could use 3-4 bank statements to prove what your income is, and we can get a loan just based on deposits. We haven't even talked about your credit,
Right.
but what we do in that process is put you through our credit enrichment program, because we own a credit company, Next Level Credit, and we're able to put your credit where it needs to be. So as a backup, right, if it takes us 30, 60, 90 days to get your credit where it needs to be, we're looking at other creative finance strategies to get you funded. So we can try to put that money to work right away.
Right.
Another very strategic way for us to be able to get you funded is I wrote a book called Decoding the Mystery of Business Credit. Decoding the Mystery of Business Credit is being able to build business credit.
Good book, by the way. I read it on road trip. You sent it in a PDF
Yes.
to me. Yep.
It's a way to build business credit. Now, traditionally, right, in my book, how I wrote it originally years ago, in fact, it was a while ago, because my kids, the pictures of my kids were like, I think they were like 7, right? So it's been a while. But in that, when I wrote it, the traditional model, I didn't have this model, so we were building business credit. And building business credit can take time, because there's a lot of nuances in building business credit. What we did now is we have the ability to get what's called an aged corporation or a wholesale corporation. Have you ever heard of the type of anything like it? It goes by
I have, but
the
I
name
don't
of, like,
have a lot of depth of knowledge in it.
it goes by shelf, shell, wholesale, aged. In premise, I can build a business on paper, right? I can have all the attributes that a business needs to be able to be a reputable business, right? Not always do you need to have all the things needed to be able to get X amount of funding, but you do need to have certain things in your business to even be considered for business credit, right? So we build what's in essence a business in a box. And this business in a box is a business that has its EIN, website, phone. It even has a personal guarantor that we can use. It has a 750 credit score. It's got a fractional CFO. It's got business trade lines already tied to it. And it's got 4 or more years on paper as an aged corporation, right? When we structure these businesses, it's meant to be because we need it to be fundable. Fundable means that a bank or an institution will look at what we present, and they're willing to give us X amount of money based on the presentation, right? No different than when you go with good credit and you apply for a credit card and you get approved for a line of credit for $10,000, $20,000. They never asked you for a pay stub.
Nope.
You filled out an application, you said how much you made, and that's what it is, right? So with our program, we can use a fraction of the money that we get you, and we can buy these corporations, and we can get $500,000, right? And this will give you another avenue to be able to now use a fraction of that money and put it to work, right? So we can build different ways to be able to get to the end goal in a very short period of time, utilizing credit as the tool or the leverage component to get you there.
If I'm understanding correctly, you can take personal credit and work on that if that's not good, and then leverage that into business credit with one of these wholesale or corporations that are in place.
Correct.
That now gives you business credit, and then get money that can be borrowed from a business standpoint, and then utilize those funds to put in there, and then through the process pay that debt off as it's earning. Correct?
100%. And the beautiful thing about the structure is you can't get taxed on money borrowed. So if I bought a corporation, let's call it, this is my B corporation, and I own my A corporation, I can borrow from my B corporation, do a note, and now send $50,000 from my line of credit that I own on the B corporation, and I don't have to pay taxes on that money. right? But that money I can use now and put that money to work with the investment firm and get a return, right? So you just used another avenue to generate income for yourself, right? What we call our third arm of the equation. And it was all in structure. It was all how we structured it to your advantage using credit, right? And nobody thinks of these pillars of putting creative financing together for yourself, right? There's a lot of people that are doing it. They just don't. They're not doing it in this fashion, right? They're getting debt, or they go and get a line of credit using their credit, but they don't know how to get business credit, so they don't have business. I had a Zoom call where I asked the lady, she'd been in business for 5 years. I said, "Do you have business credit?" She goes, "Or do you have your Dun and Bradstreet?" She goes, "I have my Dun and Bradstreet," and I said, "That's awesome. Do you know what kind of score you have?" She goes, "Yeah, I have like the highest score." I said, "That's great. Do you have any credit?" She goes, "No." I said, "What do you mean?" So you got all these great things, right? No different than somebody that has personal credit of 850. If I gave you a trophy and it said 850 credit score, that's great. You put it in the corner and you talk about it all day.
It'll collect dust.
But that trophy doesn't do anything for you if it's collecting dust. Her Dun and Bradstreet and her credit score for her business was great, but it's sitting in the corner like a golden trophy. The same thing for the guy who came to us that got denied 3 times with an 835 credit score, personal, and needed $70,000 to buy a carpet cleaning company. He didn't know where to turn. He came to us. We got him approved in 2 days, and that credit, that golden trophy, we put to work. Right. So it's no different doing it that way, right, or doing it with business credit. It's just we have the mechanisms to get there faster. And we also do the traditional credit building. So we take your business, while we're using these other mechanisms, we're building your credit for your business. So it's not just one fold, this is the only way to do it. We want your legacy company to have all the attributes. We want it to stand on its own.
Yeah. You know, what's really cool about this is, number one, like you believe in what you're doing enough to where like you've invested your
I'm the
own
walking,
money,
talking
right?
billboard.
You've invested your own money.
Not only that, but my wife is my partner in life, but she has multiple businesses herself that we set up, right? And my wife is like, there's always two sides, right? Like I'm like type A, go. Like she's the opposite, right? And she's very analytical. She takes her time with everything. That's what makes her strong, right? Well, when I started this program, you would think that she was one of the first benefactors in jumping in, and she was not. Not because she didn't believe it. She's just the way she is. Like she's going to do it on her time, not just because it's pretty and shiny and can do X amount of things. It took her about 5 months, and when she finally did it, she didn't come to me. She went directly to Brian, right, who's the owner of the investment firm, and she drilled him, and she got everything dotted and crossed and T'd and watched everything because she had to feel comfortable doing it. So she's a participant now, right? And it was great because sometimes that's how it is. You can't just go off of what I say. Look at others and do your due diligence, understand who you're doing business with. I advise that, right? Why wouldn't I? Right? And that's why I never put the pressure on her. I want her to feel comfortable in doing the things she does. Now we have some traction, right? The reality is the company started doing this in July. We're turning the corner at the end of this year. We have some traction now. We have some case studies. We can now prove and bring this to the masses. So we started fanning out nationwide. I will be going out to Colombia, to Medellin, Colombia. I set up the funding group in Medellin. There's a huge expat community of Americans that have taken their resources, monies, and retirement, and they've started opening up businesses in Colombia. And Colombia doesn't have the same methodology in lending that the U.S. has. So it's a lot harder to do business in Colombia if you want to. Takes longer. So we're taking some of these concepts and building it out in another country that needs it, right? We're going to be looking at Mexico, Canada, right? Utilizing these areas. But we wanted to really build Arizona first and then branch
Expand
out,
from there,
you
yeah.
know, expand. So, you know, we're working with our partners, our experts in the different fields, because as these people are going through our process, steps 1, steps 2, month to month, their infrastructure is changing. They're now having capital to do the things they need to do. So we're having to build their estates, right? That's where we're going to bring them through you, and we're going to need to get them their life insurance and their trust and all these different exotic things that people just don't know about, right? But we're also needing to make sure their taxes are done right and all their other things, because we don't want this to just be a 3 or 4 or 6 month thing. We want to be able to work with them. We say we want to be your partner in progress for a long time, right? The more we work together, the more we're going to help each other. It does become the power of reciprocity, and they're going to tell others. And I mean, I do marketing, but I think there's no better marketing than the power of a referral, right? Being able to say, you know what, it worked for me. This is what I've been doing. You got to give them a call. You know?
The big thing for me is I love it when people are invested in what they do themselves. And it reminds me of the story. There's a guy named Dave. I heard it years ago. But Dave was from Idaho, made some pretty good money. He's sitting there, he's getting his haircut one day, and this fancy broker comes in, and he's telling the barber, hey man, how's it going? I got this great deal, blah, blah, blah. You put this much money in, it gives you great returns, blah, 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 blah. And he's like, do you know anybody who has some money? I said, well, I happen to know somebody who has some money. He's cutting Dave's hair, and Dave was a millionaire back in the 80s.
Wow.
Says, Dave's got a little money. Says, oh, okay. And the guy just goes on this sales pitch, and he's talking about it. And he gets down and says, would you like to buy some? Dave said, yeah, I'll buy as much as you have. And he didn't sell me any shares that day. And you see that a lot. Like, I'm a huge proponent of life insurance, huge proponent. I have life insurance. I've had it for years. Right. My family has it. My kids have it. We use it as an investment vehicle. I'm a huge proponent of an estate plan. Right. I have an estate plan. Right. I have a trust. I have my assets funded in there. Like, you have your processes, and you invested in your processes, which is huge. So,
I'm in it. And one of the things I learned in getting to your point is that if I'm not looking at the same things that I'm talking about to my clients, if I'm not walking the walk and talking the talk, then I just become an imposter, right? Or a fake, right? Why people say, well, why did you get life insurance on your kids? Let me tell you, that was probably one of the best moves I ever made, right? And this was a few years ago, and I set up the trust around them. They're my biggest, they're everything. They're my biggest presents that God gave me, right? At the same time, they're going to have needs, and they're going to go through things, right? The biggest gift I could give them without them even knowing was the power of compounding, right? And utilizing an IUL policy that could give them living benefits and all the attributes while using some of the concepts that I learned over the years with the powers of compounding, right? With the want to mitigate the risk of loss, to be able to tap into those resources, and at any given point be able to give them the ability to say, I want to buy a house, and be able to tap into that resource to do it, right? Utilizing my knowledge, my talents, and my expertise to be able to help them, right? Not because I want to, no parent wants to see their children die before they do, right? That's not why I got them their policies. Let me tell you the real reason. The real reason was because at the time I was so overweight, my diabetes was so out of whack, my cholesterol and everything was so bad, I couldn't get insurance for myself, right? They say if you want to help somebody, you got to put the mask on first, right? So I took on a very determined approach that I needed to get in shape for them, that I needed to get better for them, right? It dominoed into my wife, it dominoed into everything that we're doing now, right? Health is wealth. But at the time, they were still very little, and I had to do something and not just say, oh, I can't get life insurance, so I'm done. I had to find other mechanisms that were going to work in my favor. And that was the reason, was because I was uninsurable at the time, right? Now I'm getting there, right? and there's more programs for people that have the problems that I had, right? But I had to take the bull by the horns and be accountable to my actions and say, I need a change, right? It started with me. And at that time, I said, well, even though I can't do this, I can do this. And all you can do is what you can control, the efforts and the actions that you put into place. So with the proper advice, right, in talking to my experts, they said, well, because I said, well, what can I do? I need to start somewhere. I need to help these kids. I need to help my legacy. And they led me this route. One of the best things I could have done, because as I was venturing into this, I had to tap a fraction of that in my trust to do the things I needed to do for my business, right? So people don't think like that, but I did. And when I needed it, I used that to jump into the program myself.
Absolutely, yeah.
And that became a catalyst to something that I'm doing for the long haul. Because I can pay my money that I borrowed from my life insurance back. I borrowed at a very low amount. I got it in days, right, quickly. And now it's compounding at a very high level to where by probably February, I can pay that back. And that insurance is still doing what it's doing for my kids, right? So we're just using different tools to make ourselves better, you know?
And that's
and to your point, me and Sylvia are definitely on point to get with you to get our estate done, right? Many of my friends that are starting to see what we're doing are going to become, it's one of those things where it's got to get done, right? It's not like, I'll do it later. No, it's got to get done, right? Like when I had to get in shape, it wasn't that later might not be later because I could probably have a heart attack because of where I was going with my weight and the way I was eating. And just, I'm a road warrior, you know, I'm constantly, but now I've changed my habits into habits of health, right, to get better, you know, and that you know, we cook at home and we're learning how to use, you know, different products and different things, you know, to eat better.
If you ever need recipes, bro, I've got you.
Yes.
That is my wheelhouse, trust me.
Definitely.
Yeah, you know, it all comes down, and why I love having conversations about these types of, or really anything that I don't really know deep about, is now I've learned, right? I've had a conversation. Now, granted, we've known each other, and I knew some of this, obviously, but I can dive deeper, and the people that didn't know anything about this now has a little bit more information, and that's what it's all about, is finding experts that can provide information that you don't have, so now you can make new decisions based on new information for your life, and that's huge. So how can somebody get in touch with you and talk to you, whether they're looking to, you know, invest with you on cash that they have or looking to raise capital for their business?
We make accessing me like as easy as possible. I mean, I don't not answer my cell phone almost ever, and I have ways for that to be answered through my assistant. My wife is a round robin, so that somebody's going to get to you by calling, you know, my cell phone. We'll put it at the end here so they can see the number. But I host a webinar every Friday to go over the program, and we do private Zooms so that, you know, if I can't come to your home and do a one-on-one, that we have the accessibility to be able to give you the information. We send you the information by email so you can digest it. We have multiple meetings before you even get started many times because it can be daunting and there's like a lot of little pieces that need to be talked about. Not everybody has their initial meeting with me and just starts right away. There's a lot of questions and a lot of things that we demystify by taking it step by step, right? But we definitely want to address the elephant in the room and talk about the problem and what that is and what the solution is. And that solution might not be 10x right now. It might just be, I need a loan, right? And if that's the priority right now, then we're gonna talk about that, right? Because ultimately this could be a solution for you later, right? But right now I just need this. Okay, right? I want you to think that our number one goal is in putting you in a better spot than you were yesterday, right? Day by day, right? But if you don't do anything, they say if nothing changes, nothing changes, right? You're just gonna keep doing it. And many times the compound effect when it's negative is that it gets worse, right? So it works both ways.
For sure.
If you compound in a positive, it's gonna compound daily in a positive way.
That's right.
But if you compound negative,
Hey, you drink beer and eat nachos every day, it compounds.
and
the
how
wrong
many
way.
times have you stubbed your toe and
Yeah.
and because that negative factor kicked in, the rest of your day kept getting worse,
Yeah.
and it was like the day from hell, right? That's true. That energy that's given off is 100% true,
Snowballs.
right?
Yep.
So I want you to think that way, that, yeah, you might have a problem right now, but there is a solution. And it might not be where you see yourself in 10 years or 5 years, but what if I could make it better today, right? If I could alleviate the stress and the pressure and the anxiety today, just for today, now you have more to work on for tomorrow, right? And my goal always is like, look, let's get the positive going, because maybe the solution's just around the corner. You just didn't know. And without getting religious, but very spiritual, you know, they say, ask as you shall find. Ask is an action verb. You got to ask. You got to knock, you know, and have somebody help you. Ask for help.
Yeah, seek
right?
and you shall find.
Right. And that's what I'm
But you
talking
have to seek first. You
have to seek.
look,
It's the action, right? So you got to come to us. You got to call us. You got to go to our website at www.riosbusinessfunding.com or riosbusinessadvisors.com. We're here to advise. We're here to talk. We're here to put different things in place that are going to help you. And we work with you. We work with other experts to help you. And now, as opposed to maybe June, right, when we first started talking about it, now you have a different layer of understanding in our process, right? And that's very powerful, because now you can talk to somebody and say, look, I don't know all the details, but I know that he's got something that can help you, right? And I don't know exactly how to explain it all, but what I can do is let me align you with a meeting or have you talk to Jimmy, and here's his number, right?
Well, one of my gifts is to be able to take really complex things and make them really simple. And I'm really good at it. But sometimes it takes me a while to understand that complex thing. And that's what I've been trying to do with this. And now I've got a really great understanding of it, and I can simply talk to somebody about it and break it down to where I'm not overwhelming them with all the information that, quite honestly, they don't need, but enough to where it's like, okay, do you think this would be a good solution to talk further about? And that's where, you know, I wanted to get, and I'm at now, which is why, you know,
well, it's like when they say, well, I need to get to Phoenix, and I'm in Tempe, right? And he said, how do I get there? And I said, well, first of all, you need a map, right? You need to know where you're going to know where you're going. Then once you get your map, like, you gotta know what vehicle you're gonna use to get there, right? If you're gonna walk, it's gonna take you this long. If you're gonna use the bus, it's gonna take you this long. And if you're gonna drive, it's gonna take you this long.
Where are you in Tempe? If you're at us, you take the 60.
But
if you're up by ASU, you take the 202.
And then you say, well, yeah, I'm gonna go with a car. Okay, great. And then you say, well, how does the car work? Well, now you're telling me how the engine works, right? And I'll get to that part, and we're going to get very finite because I'm going to show you that. But really, the initial goal was to get to Phoenix, right? And I'm going to show you those steps, right? We want to start talking about the engine and how the mechanisms of the engine work to get you from point A to point B. We could do that too. But right now, we need to just figure out how to get you a map, right? So that's no different, right? Let's get you the map first, then let's start talking about how the engine works, right? And that's, you know, when you start talking about 10x and, you know, sounds too good to be true, or this, let's learn the mechanics of that. But before we can learn the mechanics of how we're going to get you that, let's do the baby steps. Let's analyze your problem first. Let's understand what your goals are, and then let's start formulating the plan, right? The vision of your puzzle pieces. Let's put the puzzle pieces together.
It's a common sense approach. I love it. Awesome, man. Well, this is great.
That was awesome.
No, I appreciate you coming on. I think people will get a lot out of this. Guys, make sure to reach out to Jimmy if you have any questions on, you know, the non-recourse funding, or if you're in a business and maybe you just need a bridge type of loan. I know
lending in general,
Or, you know, if you need some, like a blueprint for your business to grow. Rios Business Advisors, not only does he have a lot of knowledge, but he's got a big network of people that are experts in their industry.
They're smarter, they're better looking, they'll help you. I mean, the idea is that I'm not the one that does everything. We work very in unison with a lot of other experts. So when I say, look, talk to Josh, they're going to give you the best of the best. And, you know, the Avengers comes together for a solution. That's how I look at it.
That's it. I love it, man. Well, thank you so much.
Thank you.
Hey, guys.
Appreciate it.
I know you got a lot out of this. Share it out. There's going to be a lot of clips and stuff that you'll be seeing. Share those as well. I appreciate it. I hope you guys have an amazing day, and we will see you next time.